everyone. I'm Chris Kapchis, President, Chestnut Park Real Estate. And today I'm going to be bringing you your November market report for the Toronto and Toronto region resale market. A lot of things to cover in this report. It's the second last one of the year. Kind of hard to believe that 2024 is soon going to be behind us. But we're ending on a I think a very positive note. That positive change in the market started in September. We also saw it in October, and now we're seeing it in November. Just to hit the highlights of the market. First of all, we did 5,875 sales, substantially higher than what we did last year, over 40% higher. Last year, there were only 4,194 sales. So we're very excited to see that kind of performance for November. I do want to note that notwithstanding as good as that sounds in comparison to 2023, on a historical basis, it's actually not a particularly strong month. Not uncommon to see 6,800 sales for the month of November, and in fact, back during the pandemic years, we were seeing sales in excess of 9,000 sales. So we're a long way off from any record levels, but the improvement is there. And as I said, it's been a consistent improvement starting at the end of the summer and working its way right through until November. And not to get too far ahead of ourselves, but I think we'll see the same pattern unfolding in December, and perhaps with an uptick due to some changes that I'll talk about in a moment. Some other notable changes that took place in November. Condominium apartments. They started selling last month, and they continue to sell into November. They were up almost 38% compared to the number of condominium apartment sales that took place a year ago. It's very positive because they were the lacking kind of component in the overall marketplace. So it's good to see the take-up of condominium apartments again. They too, though, as I mentioned a moment ago with respect to the overall number of sales, are still below kind of record sales and even going back to pre-pandemic times. But we're moving in the right direction, and that is the most important thing. Freehold, particularly in the 416, continues to remain expensive, and for that reason, there will be difficulties on the affordability side. So for example, in the city of Toronto, the average sale price for detached properties came in at $1,695,000, say $1,007,000, and in the case of semi-detached properties, $1,250,000. That's still pretty expensive. I mean, for a $1,250,000 purchase, you have to be in the neighborhood of about $250,000 gross household income in order to qualify for mortgage financing. So they remain expensive, and the prices aren't coming down. The overall average sale price in the month of November came in at $1,106,000, which is higher than it was last year. So even though we still had a difficult sales year in 2024, as we did in 2023, the average sale price has stayed firm due to many different factors, and we've discussed them at previous market report sessions that I've provided you. But predominantly, it's the supply and the demand. Demand still remains very strong. It can't be satisfied all that well because of the affordability issues that I just mentioned a moment ago, but it's still there, and it is continuing to keep prices up there. Now, I mentioned there's going to be some changes that are going to be taking place. This report is being filmed in December, and two things are happening in December. The first one is, at the federal level, the federal government has decided to change the cap on insured loans. So starting December the 15th, insured loans, the cap will be $1.5 million. It's currently $1 million. that really will speak to the markets in Toronto and Vancouver, where average sale prices are substantially higher than $1 million. That means that a number of people who couldn't get in the market because they didn't have the savings for a down payment of 20% will now be able to get in with a lesser saving amount. But as I said a moment ago, affordability is still going to be an issue. They still have to qualify at those very lofty rates. They will be helped a little bit because one of the other changes is amortization periods in certain situations can be extended to 30 years from the current amortization period of 25 years. So that's also going to help people in terms of carry costs going forward. So we'll probably see an uptick, particularly in the price point up to $1.5 million. The second change that we're anticipating is the Bank of Canada once again doing a deep cut of probably a half a point on the bank rates, currently 3.75 as we do this presentation. And we're hoping, in fact, by tomorrow, that the bank rate will go down by another 0.5%, which will take it to 3.25%. That won't be reflected, at least dollar for dollar, in the fixed mortgage interest rates. It'll have some moderating impact, but it won't completely change the rates. But they are slowly coming down, and they have from their lofty levels when in fact the bank rate was 5%. So those two changes, change of the cap rate in conjunction with the amortization period becoming a little bit longer, and the bank bringing the rates down one more time, puts us in a wonderful position as we move into December and then into 2025 to see some tremendous improvements in the market. I mean, if we're going to be candid, 2023 was a very difficult year. To quote Queen Elizabeth, it was an annus horribilis. This year is better, but still not the kind of year that we had become used to during the decade leading up to the pandemic. In the next report, and I'm pretty certain it's going to be another positive report when we wrap up the year and the month of December, we'll also look at the overall performance of the market in 2024, and we'll start looking ahead as to what we anticipate for 2025. So until then, I look forward to providing you the December report. Please stay well and stay safe. Thank you.